Good morning. What's up, guys? How we doing? Hope you're all having a good morning here so far. Let's get down to business first. As usual, get that out of the way. Now, our schedule here today, we have the Fed's Collins speaking in 2 minutes. Market open, they're speaking. So, from there, we go to Trump speaking at 10:55. From there, the White House press secretary is speaking at noon. Another Fed speaker at noon. And then we have some other Fed speakers here tonight, but most of us will probably be done trading by then. So that's about it. As far as during the stream, we have Fed speaker at market open, which we'll be waiting out institutional orders anyway, so I'm not concerned with that. And then we have Trump speaking at 10:55 Central. That's it on stream. So the Trump speak is going to be interesting, but between now and then, we're pretty free and clear as far as the news schedule here goes. Today, good morning, guys. How you doing? Welcome. Come on in. All right, market inertia-wise, we got quite the little flat top here at 21.5, don't we? So I'm watching that. Yesterday, yes, we had a bigger bull body, but we had a lower open. Okay, we're looking at the New York session daily chart at the bottom of your screen there. So I'm not going to be fooled by that bigger body we had yesterday. Yesterday was... If you guys remember the feel of yesterday's movement, it felt kind of rangy, right? We would get breakouts, but they would fail. And I think a lot of people kind of felt that way because probably we had that lower open. So yeah, in hindsight, we had a bigger body and we had a clean body, but it wasn't like we opened higher and pushed higher all day. That wasn't the story at all yesterday. We opened quite a bit lower and then just pushed into that flat top and held it. Right around 21.5, okay? So that flat top at 21,500 is a big area of interest for me. To the bull side, if we could clear that and hold, we may have something on the table there as far as potential for a trend. We'll see. But if that flat top just ends up holding through today, then I'm thinking short side movement. There's the bell. I'm thinking short side movement if we don't have room between where the contract is trading and 21.5, I'm not going to take a long, for example, okay, is what I mean to tell you. And channel scalps. That's what I'm thinking about here today. And the market is open. So let's give this a few 2-minute bars, let these institutional orders clear out, and then we'll get rocking and rolling. Keith, Starbuck, how we doing? Trading Chris, welcome back. Rick, Nina, no one, what's up, guys? Scooby-Doo, welcome back. John Mitz, Josh, Andy, higher high, what's up, guys? Good to see you guys. Corey Exposed, Aaron, Alan Gibbs, Javaz, what's up, guys? Ken, how you doing? Bricko Jude, Sonia, Joseph, good morning, guys. How we doing? C Mac, Tony Lanes. Zach, good morning. How you doing, brother? Peter, John, what's up, guys? Diesel Man, welcome back. Jeremiah, good morning. All the regs pouring in here today. Good to see you guys. Hope you're having a good day. We've got work today. Work to do. Evals today out of Keith. What's up, LT Dan? How you doing? So as you guys join us here, we're just waiting for some institutional orders to clear out. Again, I usually give this, 10, 15 minutes. Seems like a long time, but it flies by. I mean, really in these first 10 or 15 minutes, I'm open to taking trades. I'm not completely against it forever, but especially right now with all the tariff talk, we're getting quite a bit of, I'm not going to use the word volatility. We're getting a lot of kind of choppy decision-making off the open because we have a lot of orders going through that are coming from institutions and they're scheduled to execute at, such and such time between 8:30 and 8:45. And if we look at, well, why are they making the decision they're making, buy or sell? It's usually based on not the intraday mentality, at least for most of these orders. It's going to be based on usually multi-day, multi-week, sometimes multi-month decisions, which that doesn't help us, right? So yeah, I mean, you see these wicks here off the open. This can just brutalize you if you get stuck trying to trade this stuff. Because, I mean, really, where is the edge coming from? I think it's tough to find it right off the open when you don't really... You're not looking at the same thing as institutions. They're not even looking at a chart. They're just executing based on price for 3 weeks out. It's a tough environment that I'm not really into. Marshall, good morning. Pat used code BIG, giving Take Profit Trader a try. I think you're going to like it. The thing about Take Profit is, you know, yeah, you have to trade 5 days to pass the tests, whatever. But once you get in a pro account, it's really, really nice. Daily payouts is a great luxury, we'll say. It's really, really nice. Whereas with Apex, you know, you can scale to 20 accounts. I think Apex is fantastic for scaling in general. But it's just different. You got to wait the 8 days for payouts. The payouts, I mean, you know, once you get a payout approved from Apex, I mean, it could be a couple days. It could be, I've had it take a week and a half plus to get the money in the account, which is not like a big deal, but it's nice to have Take Profit where it's like, you press proceed once they approve the payout, and it's literally in your bank account in like 5 seconds, which is kind of crazy. Lee, good morning. Oh, Lee got sick. Good to have you back, brother. TC, good morning. How you doing? Joseph, started Take Profit Trader yesterday. Had a good day and hoping today continues. Did you start the test, or is it your was it your first day on a pro account? All right, market trying to make a push lower here off the open after a little bit of a bounce right off the bell. Bears trying to take us into low of day here, expand the range a little bit. The range on these opening bars is not tremendous. I mean, we haven't even cracked 30 yet. Well, you know, this bar will have cracked 30, I believe so. Yeah. But let's try to get ATR, which is that blue flag at the bottom. That was a big... Did you guys see yesterday afternoon? ATR became kind of an issue. More than it already was. It got down to like 13, 12... maybe less at one point. It was tight. And that, you know, that makes the movement a little bit less smooth typically. TL, good morning. How we doing? Headline from Elon, he said, I'm pushing ahead with lawsuit against OpenAI. That last bar expanded us to 3275 as far as range. It's getting a little bit better, but I really prefer when these opening bars are between like 40 and maybe 60 or 70. Maybe even a little bit more off the open since I'm not trading the open anyway. Dieselman says, I got 150K. Dieselman, I need you to clarify. Are you saying you got one $50,000 account, or are you saying you got a $150,000 account? Big difference there. All right, a few more 2-minute bars and we're pretty much free and clear to trade as we play. I mean, as we please. Dieselman, 50K eval. Trading one mini with a $200 to $250 stop. What do you think? Well, if the ATR is really tight and you're running $10 stops, 10-point stops, that's about as tight as I'd ever even think to go on Nasdaq as far as scalping. But if you're like a true diehard, arguably a micro scalper, you could run that. I think it's a little bit tight, and I think minis are always too big for, especially a 50K account across the board at pretty much every single prop. I think micros are the move for pretty much every prop account in existence. Unless you want to get like a 300K at Apex and then trade one mini. But even with the 300Ks, I still just hit the micros. I mean, it's plenty big. I know you see this here, bulls step in and take us higher, trying to hit that kind of descending resistance that we can all see is becoming a potential thing. We'll see if that gets set in stone. There's really only one or two touch points as of right now. Now, keep in mind, guys, remember 21.5, big ol' flat top on the daily as far as the New York session is concerned. Okay, the New York session has been struggling in a big way with 21.5. So if we come in for a test here this morning, we got to be paying attention. Pat, how many micros are you trading per account? Well, it depends on the account. I'm trading anywhere from 1 on my leader, though admittedly that leader Apex PA account is kind of a sacrifice just so I can trade 1 micro to keep a baseline so I can use a multiple easily across the other accounts without having to think too much. So I'm trading anywhere from 1 to 5 micros across a number of accounts between Apex and Take Profit. Prop trading, it's just it's a little bit of a different game. I just think that it when you think it through, I just think it makes all the sense in the world to trade micros. There's no reason other than ego to trade 1 account with minis when you could trade 10 with micros. It's far more sustainable. The probability of payout goes up. Yeah, sure, it might take you a little longer to get a payout, but in most cases, that's actually not even going to be true, because if you're trading too big in 1 funded account with minis, chances are you're going to blow up. Run the stats, right? Run the probability of losing 2 or 3 trades in a row with your stats, and you're probably going to blow up the account if you're trading too many minis, or even 1 mini in a lot of cases. Which means you don't get to a payout. So take it easy, scale horizontally. All right, you guys see this kind of back and forth. We had 2 bull bars, 2 bear bars, big bull bar, big bear bar, at least attempted a big bear bar. This is why we wait. This is why we hold off for those institutions to do what they want to do. I see people all the time, they really like to slap orders 15 seconds into the open. You know, if they have edge, if their data says they make money, then they should have at it and trade that more. I just think it's really hard to find edge in that environment. It's just fundamentally the reason for a buy or sell off the open is almost always far different than the reason for a buy or sell 15 minutes later. Lee says, when you get to a point where you can take a payout in 10 plus accounts just from micros, those minis become irrelevant to you. I agree, Lee. Now, listen, guys, here's the reality, though, with mini. If you're still on the fence about this, let me just lay it out for you. Between minis and micros, if you're like, wow, I still really want to trade minis because You know, if I don't know, I feel weird trading micros. Fine. You're an adult, make your own decision. But if you don't have a statistical edge, trading minis is going to be more brutal. Okay, because it's going to, I'm sorry, trading micros is going to be more brutal because it's going to bleed you out more slowly. Whereas the minis, think of it this way. Trading the minis without edge is a lot like playing blackjack. Big and taking, you know, 3 to 5 hands. That's kind of the equivalent of what you're doing if you're trading without statistical edge and you're trading in a prop account with minis. Okay, $20 a point on Nasdaq. Now, trading micros with edge is a lot like counting cards, but like 30 years ago when it was better. I mean, I know which one I would pick. All right, we are into 844 territory, which means the close of this 2-minute bar would be the first bar that I could take a setup on, but but there's not a setup there. So luckily we're always within 2 minutes. I'm sorry, two 2-minute bars of a setup developing. So we'll see if we get some here in the next minute or two. Old school, good morning. Hey, Brandon, how we doing? All right, so ATR is up around 22. Let's get that thing expanding a little bit. We're coming into where 850 approximately is where we get all the bars that are being averaged into the ATR are post opening bell around the 850 mark. So that really is where we can kind of cement where ATR is sitting because it's no longer including pre-market bars that are going to be smaller. Again, ATR, if you're just joining us here, is the average true range of a 2-minute bar. So the average range in points of a 2-minute bar based on the last 10 2-minute bars, so the last 20 minutes. So I'd prefer to see that pop up above like 30, 35, maybe 40 here in the next couple bars. But we got to work with what we got. Lord of Fuse, good morning. Yeah, TL, Trump is speaking at 10:55 a.m. Central. Make sure you guys remember that as we move through the morning here. Also, just got a headline not too long ago, a few minutes ago, from the White House. Trump is making a 2 p.m. Central Time announcement with the Secretary of Defense. So, again, that's 3 p.m. Eastern, 2 p.m. Central. We'll see what that's about. Yeah, see that push? You know what I imagine that was? Stops, right? I mean, stops at low of day and stops at that little descending support level. Those two things together, you get a whole bunch of stops at the same region, and there you go. You get a push through, and it's good for maybe a 10-point move, 15-point move. Really 10 points initially. This is all extra here. Simon says, how many days do you have to trade for an Apex eval? I passed it in 5. That's good. But if you use code BIG, which everybody should, best deal always, you can pass it in 1 day. Well, okay, this problem, I don't want to be a bad example here, but for argument's sake, because you're all adults and you should know how, like, the reality of it, if you use the code, you can pass an Apex eval in 1 trade in 1 second. Technically, you can pass it as quickly as you like, but that means you have to trade very aggressively, right, to get there on a move that fast. But just so you fully understand that, guys, you can pass an Apex eval as quickly as you want, as long as you used that code when you bought that eval. Not that you should necessarily, but personally, again, I can only tell you my truth. I prefer, based on opportunity cost, I don't like to spend a lot of time in evals if I can help it. With Apex, since I can pass it in a single day, I never spend more than like an afternoon on an eval. But again, that depends on where you're at in your journey. You know, if you haven't quite taken payouts yet, that's fine. That doesn't make you a bad person. You're just not there yet, and that's cool. But if you haven't taken payouts yet, you don't really, I mean, let's be honest, like business model wise, you don't really have a proof of concept yet. So you got to develop that. So take your time in the eval so you don't just blow through a bunch of money. Learn the lesson, get your edge as cheap as you possibly can. That is the smart way. That's not the conservative or the lame way to do it. That is the intelligent way to do it. And then once opportunity cost becomes a thing because you're taking payouts, then you can spend like an hour on an eval max. John, what does one afternoon in an eval look like? Same setups, but bigger position? Yeah, again, I can just tell you my truth. I don't, you know, I think just blindly following is a bad idea, but here's what I do. You guys see the quality of setups. I'm relatively selective in the funded accounts. In evals, I drop that by like 1 notch. So I'll put on like a B+ setup in an eval, but usually that first trade, let's assume I'm trading a 50K eval at Apex. Or let's just say 50K to make it easy. The first trade, I take pretty damn big size because the way that I think about this is all about opportunity cost. I'm not thinking about the cost of the eval, really. I'm thinking about the opportunity cost of not trading funded because I'm giving my mental capital to this test. Okay, so the first trade on a 50K eval, to me, is the biggest, and I try to find a reasonably good setup. I'm not trading a D setup, okay? But it's like a B+ and above. If it's an A+, great. And if that one's a loser, I want to know that as quickly as possible, right? Which is why I take my first trade the biggest, and then I size down into the finish line. Because now, if that first trade's a winner, I'm sizing down and taking more time to get to the finish line. And the time is what I'm concerned with, not whether or not only like, is this first trade going to be a winner? It's like, no, I'll put on the best trade I can with big size. If it's a winner, then it's like, okay, I'm closer to the finish line. It's time to invest a little more time into this eval. If it's a loser, I want to know that as soon as possible so I stop spending time on it. That's the only way that makes sense to me. But again, this is like once you're taking payouts consistently, it's that makes sense. And this isn't like you gotta earn your stripes kind of bullshit. Like, no, like this is what makes sense for where you're at in your journey. Again, doesn't make you a good person, doesn't make you this monster trader, doesn't make you a bad person or a shitty trader. It's just where you're at. If you haven't taken payouts yet, the opportunity cost isn't really a big deal. Spend time in the eval. That's gonna get you edge, if you're tracking your data and paying attention, for cheap. All right, here we are watching this little reversal attempt here out of the bulls. Look at this push. Right back up to that little descending resistance point. This is clearly becoming an area to watch. We'll see if that holds. Now, by the way, as far as evals, I should clarify that Currently, some of my Apex accounts are static drawdown accounts. They're, what are they? I think they're labeled as the 100K statics, is how they market them. The statics are cool. I actually like the statics, but I trade the evals of the statics opposite. So the first trade has to be small just because they don't give you a lot of drawdown room. And then the trades after that, I size into. Okay, so maybe on average with static evals, on average, you're spending a little bit longer time. But I gotta tell you, I mean, I like the static accounts, but as far as the eval method for like 50Ks, 150Ks, 300K accounts at Apex, I prefer that because that first trade is kind of like, you know, you give it your best shot, but it's kind of the band-aid. It's like, I don't want to spend too much time on this if I'm not getting close to the finish line. That's just what I do. And that's all I can tell you. All right, Bull's trying to take us, trying, the keyword, to take us through this little descending resistance point. We'll see if they can. Now, if they can, remember 21.5, that's 21,500, is a big area of interest. That's a flat top that we've seen a lot on the New York Session Daily, bottom of your screen. You see that? Superfly, good morning. Welcome, how we doing? All right, let's see if we get a nice little rejection here. I would need to see it follow through. Now, again, I'm thinking I have my eye on some channel scalps here today, but I need to see a nice little channel develop, and we're getting close. If the bears can reject this and take this lower, I would say at least 50 points lower from here, from where we currently sit, and then a little retest, I'd be interested. Chris, good morning. Says, I'm away from the computer for work today and tomorrow, so just stopping by to say hi, get after it today. Damn, Chris. That pesky job, just come hang out with us all day. You'll understand. All right, Bear's trying to reject this here off that little region. Quite the little descending resistance, but Remember, I'm looking for 3 touch points, reasonable touch points, which we kind of now have, I'd say. And follow through on the third is important. A lot of times what you get is right here at this very moment. A lot of times what you get is a little reversal attempt, and I call that a mushy rejection because it's not nearly as deep as the previous. And what does that tell you? That tells you the battle between the Bears and the Bulls is different than the previous rejection, which kind of renders that descending resistance a little bit less meaningful, at least to me. So let's see if the Bears can dip us down low and then give us a nice little retest. All right, I do have to say though, this is interesting. All right, if the Bears can hold this, what we see here is we have a channel, right? I'm looking at the channel scalps, but as long as we have room, I'm also very interested in, like this is currently, we're looking at a descending channel, right? I'm very interested in little stop hunting continuation trades in the channel. We're in a range market. So I'm a little bit less, unless it's just a beautiful setup, I'm a little bit less into taking like big continuations on the far outskirts of the channel, but we are currently inside of the range with, boom, stops to hunt near the low, right? So we have 12 seconds here, and let's see if we can get the Bears taking this lower and the Bulls are keeping it wicked up. Oh, that is ugly. That is not what you want to see there. All right, no setup there for me. Similar idea applies here, by the way. We can get a close maybe in this region. And you got 20 points before taking out, maybe 20, 21 points before taking out those stops. Yeah, that is my interest. All right, let's see if we can get that. We've got a minute, 60 seconds left until the close of this 2-minute bar. If that occurs, I'm interested. If anything other than that occurs, then we're waiting. Nah, did we just get it? That movement doesn't make sense to me. We got the Eurozone consumer confidence flash. That came out 60 seconds before that big wick push. You guys see that? I'm wondering if we got some kind of little headline that just hasn't come through yet. All right, 30 seconds left on this bar. Yeah, those big random wicks can kind of mess you up. 10 seconds. Nah, it's not there. It's not even close. See that big wick? These big wicks, these are ugly. Not to mention we closed inside of the wick low of the previous bar. That's just nothing for me. I can't put that on. I still really like this low setup here because you have this, I mean, think about it. You have this descending support. It's aggressive. So any push through, and the Bulls are kind of waiting to buy until, you know, we hit the line that they drew. Where are they going to draw it? They're probably going to draw like this, right? So there's plenty of room there. But again, I always have a couple ideas on the table, so I'm now kind of reverting back. Well, if we get this little channel scalp, we didn't really get... We got a decent push, but we didn't exceed this low. which tells me the bulls are starting to step in a little bit earlier. A lot of times what happens here when you start to see this, if you actually get a reversal here, which is yet to be seen, but if you get a reversal here, a lot of times what will happen is you'll get another little rejection. It'll be even smaller, and now the bulls have, oh look, there's an ascending support. They buy it and take it higher through the wedge. That's what happens a lot. Really, really common on futures, which is why when I say mushy bounce, mushy rejection, that is a turnoff. I'm not into that. So I'll tell you what, while this develops, I'll be back in a couple of minutes. Don't go anywhere. We got work to do. right, we are back, baby. Still holding this little channel, and I gotta tell you, I'm pretty interested here. So, yeah, you know, something I've been thinking about a lot. Well, first of all, here, look at this. Yeah, this, hang on. Let's get this drawn here, because this is becoming a lot more set in stone. I would draw it. I gotta tell you, I'd probably hold off on this recent test and draw it like this. Kind of split the difference of how I think most people would draw that. All right, now let's see if we can get a little test and see how this reacts here. Attempting to push through here already. No trade so far for me. Okay, that might change some things. So now I'm curious. I'm looking at this channel, but I'm also considering, okay, well, if we end up getting a bull continuation, however, then you know what the conversation becomes. The 5-minute chart, that 20 EMA on the 5 becomes a thing, right? Right ahead of 420. So I gotta see how this thing reacts right here. You see that wick back we got out of the bears. Now we got to see if the bulls can take this higher and give us a close outside of the high of that previous wick. Okay, this here is very telling because of this look on the 2-minute here. See that little trend line that was there. So we're now attempting to push through, but we're going to get a few wick backs and retests. All right, here we are getting a push. We have 45 seconds till the close of this 2-minute bar. Now, the high of day currently sits... It's hard to even see where the open is because the opening volatility was so embarrassingly low. The high of day currently sits here at this wick. Okay, so starts to get me relatively interested. However, in a trend market, in a range market, don't get that confused. That's a scenario we've seen a couple of times in the last few trading days where we get a hard push to the edge of the range and then the breakout fails. So we've been seeing a higher probability of failed breakouts, and you see, luckily we got that Not luckily, but we did end up getting that wick back on the same bar, which tells us the story and gives us the information before we had to make a decision, which is good. Rangebreaker says, dude, how can we get you to go? Dude, how can we get you to go mechanical with your trading? Backtest for 3 years and set one bracket order per day and walk away? I don't think I know what you're asking. Rephrase the question, Range. Just take Bravo Trader. Still have no activation fee. Yes, they do if you use code BIG. BIG, what's up, TubeDAO? How you doing? All right, we've got 44 seconds left here on this 2-minute bar. We're heading right into the 5-minute 20 EMA, by the way, top left of your screen. We're heading right into that blue line. Yeah, Range, the automated styles they're great, they're fine. However, let's not pretend that there's no discretionary aspect to trading futures intraday. There's a tremendous discretionary aspect that a computer cannot replicate yet. At least, not well. And by the way, the automation side of trading assumes that you hate trading. And I've always heard that argument, well, why not just automate the strategy? And it usually comes from people who I don't think actually like trading. I wanna be here right now. I wanna sit here and watch the candles. In a lot of ways, if you're somebody who's really into building algorithms and like trading is just your out, kind of the outlet that you use to do that, that's fine. But a lot of people, they want to build an automated strategy so that they can walk away and go play golf or go play tennis or sleep in every day. It's like, that's... I can't do that. So, I mean, to be honest with you, I know it sounds silly, but like, I don't want to automate this. First of all, I would outperform the automation, and second of all, I like the puzzle every day. Corey, what's up? Appreciate you. Neil says, you still have to babysit an automated strategy. Power issues and glitches can create some real problems. Listen, yes, okay. This is something we should discuss while we sit here and wait for this thing to develop. If it sounds like range breakers, you know, they know what they're doing, but as far as if you have this dream of having an automated strategy, let me Oh man, I forget the details, but let me share with you a story that I heard that turned me off to the whole idea. There's a lot of people who have traded with using algorithms over the years. And if you guys remember a few years ago, there was a major fund who had a big glitch. And they were running an algorithm, and it was being overlooked. Or looked over, I should say, not overlooked. It was being looked over very carefully. And this firm had hundreds of millions, if not billions of dollars being traded using this algorithm. And it was a well-known hedge fund. And guess what happened on one random sunny day? There was a small overlooked glitch in the algo. And boom, it instantly bought, sold, bought the offer, sold the bid, bought the offer, sold the bid, bought the offer, sold the bid. Thousands, tens of thousands, hundreds of thousands, millions of times in seconds. And this continued for minutes and minutes and minutes until they figured it out. And guess what? When it was all said and done, when the algorithm was turned off, you'd think they could just unplug it. Apparently it didn't work. The entire damn near fund was gone. Gone! Because they lost the spread every time. Bought the offer, sold the bid. Bought the offer, sold the bid. Ping pong back and forth until billions were gone. Instantly. Vanished. That kind of shit really does happen with algos. And that's not one story, by the way. I've heard this same story from funds. I've heard it from retail traders who traded algorithms with no problems for 5 years. Then all of a sudden the algorithm lost more than they've ever made in the 5 years in 1 minute because of a glitch. Horror stories across the board. If you don't have the resources to hire, programmers, quants, all these things, which for a retail trader, we're not going to have that. Basically, you have to be a big institution to be able to look over it well enough for it to work well, long term. I don't know. If something's going to go wrong, I'd like to be at the wheel. And with copy traders, sometimes things go wrong. Benny says, bugs are fun. I burned 4 accounts from a copy trader that glitched. It made like 1,000 trades in 1 minute. I had the same thing happen. I had the exact same thing happen with a copy trader. It maxed out my size and it would not stop. And when I tried to close it, it flipped me the other direction. Maxed out my size, would not stop. This was a few months ago. Instantly blew a few of my Apex. Actually, I think it was maybe 5 or more funded Apex accounts that I'd been running for quite a bit at that point. Blew them instantly. The copy trader reached out. They actually took care of it. They made it right. It was very good of them. A lot of respect, but that was an interesting experience. Well, okay, so realistically, guys, here's where we kind of currently sit. We're in a wedge. I mean, I would probably end up drawing this. I'd prefer to draw it like that, but we really can't for argument's sake. I would guess that a lot of people are going to end up drawing this like this. Whoops. Or I draw like this, and then obviously we have... you know, this is kind of sloppy. I'd probably just split the difference and draw it like that. We're in a wedge. Okay, now wedges break out eventually. Which direction do they break out? Well, especially when the lines are similar like this, it's about 50-50. Superfly says, I'm not copy trading anymore, just rotating accounts, lost too much on copier issues. Fair. You know what? Fair. I get it. Copy traders are notoriously weird. What I'm using's been pretty good. But I gotta tell you, I wouldn't trust it with my life. Chris says, I copy trade, but I group them into groups and rotate them during the trading session. Yeah, also smart. When you get to a certain size of accounts, like if you're running like 30, 40, 50 accounts especially, I believe that that is intelligent to do that. But you're hedging at least half of your accounts against copier problems. But yeah, Ninja Trader also causes a lot of these problems. Maybe someday we'll have tools for prop trading that work well. They work pretty well right now. They're not perfect. There's issues. You would think these would be relatively simple to fix. Like the ghost order issue in Ninja, I don't know how they haven't fixed that yet. It baffles my mind. You guys haven't yet? Press the like on the stream. Weak today. What's going on? At least get it to 3 digits. Come on, man. Neil, copy trading prop firm accounts in the futures market is leveraging leveraged leverage. Damn straight. 2025, baby. Get on board. Terry, why'd you switch from Replicanto? Because this new one, it's pretty similar. But the reason I switched is because this one shows the P&Ls much better on screen. It totals them up, which obviously is helpful for this. But Replicanto, if you're just trading on your own, you're not like needing to show it or anything. Replicanto is good. I didn't have too many problems with Replicanto. It seems like functionality-wise, the one from Affordable Indicators, which is what I'm using now, and Replicanto are pretty similar. I think Affordable Indicators does have a few more features. If you struggle with risk management, the one that I'm using now, if you buy the, I think you have to buy the risk manager feature also. But it like stops you. It doesn't let you move your stop. It's like training wheels, but sometimes that's helpful if you're someone who struggles with that. All right, so let's look here. Trend line currently sitting around 412. Bottom of the wedge currently about 386. Less than 30 points inside of the wedge. Kind of tight. Hey, John says, does the VIX ever factor into whether or not you take a trade, or are you strictly trading off the NQ chart? Kind of. John, look at the range at the bottom of your screen here. The yellow is the range of each individual bar, and the blue is the average range of the last 10 2-minute bars. So, not the VIX itself I'm not looking at, but I'm looking at the volatility of the last 20 minutes pretty religiously. And if that dips below like 10, I'm out of here. If it dips below 25, I'm leaning a little heavier into negative reward to risk. And if it's between 25 and 60, 25 and 70, I'm trading freely. Above 70, and I usually start to hold off, kind of similar to below like 12, 10. Because usually you're getting a lot of news if it's above 70. All right, now worth mentioning here on the 5-minute chart. See how that trend line is lining up there with the 20 EMA on the 5-minute? A psychologically heavily watched level. We'll see if that becomes an area of interest. Now again, this channel here is less than 30 points wide. Okay, there's the attempted push through out of the bulls. All right, now we're getting a push. Kind of an outsized bull bar here. Jamie Dimon is back at it, saying that the US is like the worst place he's ever been. He said the odds of a recession are at 50%. This guy is never, I've not seen a positive headline from Jamie Dimon in like 3 years. All right, 45 seconds left here. Okay, that's gonna be... that's an outsized bull bar. That is an outsized bull bar. And by the way, that right there pushes us into intraday highs. So we took out some of these stops. You see it gave us an extra 5 points, which is about right. 5 or 6 points. Yeah, that's pretty much right. Now from here, we got to see how the next bar or two develop. Yeah, L-Rock, I think you can set up ATR on... Yeah, I have it. You can't see it. It's just out of screen to the bottom. But yeah, you can set up ATR on Thinkorswim. Just search it in the indicator section. All right, now it wouldn't surprise me here. We have 60 seconds left on this 2-minute bar if we struggle here. Because if you look... Let's look at the 2-minute. Gives us a good view. What's up, Pumple? How you doing? Market opened here. Okay. So this has been the range all day. Which I gotta tell you is embarrassing. The entire range on the day is 90 points. Not even 100 points, which that's an embarrassing range at this time of day. So when we're getting pushes like this that are testing that range, a lot of people would look at that and start putting in the chat, hey, continuation, right? And I wouldn't blame them. However, this bar is very outsized, which already shoots that idea in the foot because you tempt this too much. But secondly, we're now pushing the outsides of the range, and we've seen in the last few days that's been kind of a hell of a problem. we start pushing the range, the other side likes to step in now and take those trades and at least attempt to hold it back, which is not good for continuation because breakouts are failing at a higher rate than what is normal right now. Normal markets, approximately 80% of breakout attempts are going to fail in one way or the other. Right now, I gotta tell you, I think that is creeping up toward 90%. And that's just within the last, like, day or two, realistically, that we're seeing that creep up that much. So we'll see if the bulls here can actually get some movement higher. And if they can, it wouldn't surprise me if we end up in a little ascending channel that we could buy the support of. But here, we should delete this now. I like to clean up my charts as we go. We'll leave this guy in case we have to extend it. But this is a really interesting kind of moment in time here. Alan says, as a breakout trader, it's been rough. Yeah, a lot of breakouts failing lately. Bumble says, if it's 80%, I can't help but ask, how come you didn't come up with a setup for those conditions? That's where you're wrong, Pumple. I have many more setups than I've shown thus far on stream. And I've been thinking about this actually lately. I've been thinking, you know what? I've been taking the trades you guys are used to, and I think that a lot of people are getting the idea that that's all I ever do. And that's not true. You guys have seen me trade lots of other setups. It wouldn't hurt if in between the trades I typically take, I size down a little bit across the copy trader and put on some A-, B+ setups. Get some more action rocking and rolling here. Jared, today's range is less than some bars we have seen recently. Just to put this into perspective, by the way, guys. Yes, Jared, you're very correct. This is the entire New York session here so far. You see this? The range, if you look like here when I'm on that bar, okay? The range is less than 100 points. 91 points. There we go, 90. Oh, it's expanding. It's getting big. 95 points. Back here, we saw single 2-minute candles that had ranges of 200, 300, 400 points. 4 times the range within 2 minutes than we've seen the entire New York session so far here today. I don't want this to come off as like, oh, I'm complaining about volatility. No. I just think that's wildly interesting to me because, I mean, that's crazy. Like, if you didn't understand that, you might still try to trade the same way you were trading back in Tariff Talk, but, like, this just goes to show, like, you have to make some adjustments on the fly. Trading is a very, like, thumb on the pulse kind of mentality. You gotta keep your finger on the pulse. Taz, quick question. If I have my take profit at like $200 and I exit at 100 because I see it turning, would Apex say anything to that if I didn't break the 30% rule? Well, listen, Taz, if you're sure you didn't break the 30% rule, then my next question is, where's your stop loss? That's very important for the question you just asked. Dollar-wise, how far away is your stop? Assuming you had one set, which in this market condition, I think everybody should. All right, average true range. Oh, goodness, it's falling off a cliff. It's at 19. Look at these yellow bars. With an 8-point candle. 12-point candle. Taz says, I always put it at $200 take profit, $200 stop loss. No, in that case, you should be fine, Taz. If you pull it at 1 to 2 reward to risk, I do it all the time. Haven't had any problems with payouts from Apex. Remember, we talked about, yeah, maybe this will turn into a little ascending channel. Well, we're kind of getting that, but I gotta tell you, it's tight. When you get these tight little... When you get these tight little ascending channels like this, a lot of times what happens is you start to flatten out and get a little flat top going, which we're kind of already seeing. John says, Nico, do you always wait for the bar to close before placing a trade? No, I do not. I do on continuation, just because, here's the reality, guys. Waiting for a bar to close before placing a trade, I think a lot of people, when you think it through, you're like, well, but isn't that kind of arbitrary? Yes, it's very arbitrary. But that's the point. You have to have a moment in time that is your decision-making trigger and cutoff for a setup like that. Otherwise, and not to mention, the top of the minute makes a lot of sense because every 1 minute bar, every 2 minute bar rollover is also going to be the rollover of a 1 minute bar. Some 2 minute bar rollovers are also going to be the rollover of a 5 minute bar. Okay, so you start to see a lot of decision-making going on around those times. And a lot of times people will wait for the candle to close. That's just human behavior. A lot of people wait for that. So on continuation, yeah, I do wait. On like a channel scalp, buy low, sell high mentality, sell high, buy back lower mentality. In that case, I actually don't like, if the candle closes when I'm making a test, I don't like that at all. Because a lot of times what you get, for example, let's look here. If you get this, like let's say you got a test here. Okay, bar closes and rolls over. You go from being on top to on bottom I find that confuses a lot of people. So you end up getting that rollover, you get a retest, and then the bulls tend to be a little bit more hesitant than they were. So it depends on the setup. The answer is absolutely not. I do not always wait for the bar to close. All right, now, if you're just joining us, you haven't been here all morning, just a reminder here that when you look at the New York session flat top, there is a brutal flat top around 21,500. Okay, so we're paying attention to that. Obviously, still about 55, 60 points out from that region. It's going to be a region. It's not an exact number. It's kind of an area. But I'm also thinking about that here. And letting this thing widen out. ATR currently, it is falling. It's sitting at still about 19, being propped up here by this bar, this bar. These headlines always just kind of crack me up. One of the headlines today was, you know, I mean, it is a negative headline, but the context of it, I think, is kind of ridiculous. It says, a 6-day winning streak that propelled the S&P 500 to the brink of a bull market is set to stall as investors bet that U.S. stocks will lag the rest of the world. Now, we're looking at the Nasdaq, okay, not necessarily the S&P, but similar enough. If we look at the last 6 days, not including today, yeah, sure, we had a big gap up here, great. But between here and yesterday's close, I mean, from the open to yesterday's close, comparatively speaking, we didn't really make a hell of a move. Like, it seems like you can move 200 points in 12 days on the Nasdaq, which is like nothing. And the media is like making it like this big deal, like we're in some big bull market. I think it's just ridiculous. I think it just confuses people. But we as traders understand that this thing's in a range, man. We're not breaking out like crazy. Jeremiah says, clickbait pays. Yeah, don't hate the player, I guess, right? Thank goodness we're getting some movement here. Breaking below the 20 EMA on the 2-minute chart. Breaking below the 20 EMA on the 5-minute chart. Let's go. Let's get some movement going. Bulls are going to try to prop it up on this 20 EMA on the 5, by the way. They're going to attempt. Let's see if they can hold it. All right, what we should do here, let's look at the 2-minute chart. We should extend this out just so we kind of know it's there. It's been a little while since we've tested that. We should be aware of that. Kind of right around 404, at least on this 2-minute candle. Gaines, what's going on, Reg? Hey, welcome, brother. Couldn't join the stream the last 2 days. My city got hit with a big tornado, St. Louis. Oh, man. Sorry to hear that. Hope you and yours are all good. Yeah, the weather's been nuts. The last, like, week and a half. Hey, Kyle, this is the Nasdaq futures contract. What you're currently looking at is MNQ. It's the micro contract, and this is the regular mini Nasdaq futures contract. Basically the same chart, just different size on the contracts. No, Zach, I'm not thinking about buying this because as we make this test, we're also getting the early stage continuation look. So there you go. Oftentimes you get that. All right. Let's think about this here. Let's think about this. So, the Bears would have to do work and get this thing closing nice and low. If they could, down around 390. I'm sorry, more like high 380s. That puts us on the outskirts of the channel, but I'd be willing to take that bet because we have stops, stops, stops. All right, 42 seconds left on this 2-minute bar. Let's see if the Bears end up just getting wicked back. Again, it's a range market, this kind of thing. Big push, big wick back. Very, very representative of a range market. So listen, again, if you're somebody who like is looking for big giant breakouts, just understand probability's low that occurs right now. But with all those stops lined up just beautifully, I would be willing to take this trade. 10 more seconds. Bulls are keeping it wicked up. It's not going to be an entry for me on this bar. We're holding that trend line, actually. At least close to it. All right, it's coffee time. Be back in 2. we are back. All right, so average range here of a 2-minute bar is we're holding in the high teens. We're holding that 19 region, which is, I mean, it's good to see that. It's better than collapsing down to 11, right? That would be a disaster for us. Kings, what's up? How you doing? Good morning. Jeff says, hey Nico, can you use Rhythmic with Apex and Take Profit Trader at the same time? Well, so quickly, I know people have had issues trying to use Tradeovate with both at the same time. What I do is I use Tradeovate for Take Profit and Rhythmic for Apex. But I believe you can use Rhythmic with both at the same time if that's how you set it up. But I just separate them so it's easy. All right, we got a nice little attempted break of that trend line going. You see here on both charts, the 2-minute though, top right. It's been kind of sloppy here today. I mean, interesting. It's been interesting for sure. Yeah, there you go. Mark's got it. He says they only allow one rhythmic connection. Is that true? I've never tried to use multiple rhythmic connections. Yeah, that makes sense. You can have multiple, but you can only use one at once. That makes sense. Yeah, I mixed it from the get-go. I did Rhythmic with Apex, and I went Tradeovate with Take Profit Trader. Starting better futures. What's your favorite prop firm? Ooh. It's so hard because Take Profit Trader is so nice with daily payouts. They get you your money right away. It's really, really nice. But with scaling, you can't beat Apex. They let you go to 20 accounts. Their rules are only getting easier and easier to truly understand. They're getting more and more transparent with the rules on payouts. They're filtering your accounts better to even request payouts. Can I say a mix of both is my favorite? Because that's the reality. Picking one, I think, would just be a toss-up. Pierre says hello from Brazil. What's going on, brother? Jeremiah, I always thought if you want to copy trade, you have to make sure. By the way, I'm watching this setup here as we make a push higher. It's interesting me. It's still in the early development stages, though. I always thought if you wanted to copy trade, you have to make sure your accounts come from the same data feed, like Rhythmic, etc. I guess not. No, you can mix as long as you're able to have both connections at the same time, and the copy trader doesn't care. You just add the account, but you got to be able to connect to both at the same time. So again, for example, I use Rhythmic with all my Apex accounts, and then I use Tradeovate with all my Take Profit accounts. We have 15 seconds left here on this 2-minute bar. It's not really doing much. It's sticking to being a doji here. King says, next time they run an 80% off on Take Profit, I'm jumping on it. Got to get my feet wet, at least for the experience of prop trading anyway. Kings, I hate to break it to you, I don't think that's coming. The Take Profit Trader deal is 30% off. And what a lot of people don't think about is the no activation fee makes it like more than that. It's 30% off the test fee. But if you don't use the code, you pay full price, and then you also have to pay a well over $100 activation fee when you pass. But when you use the code, you get 30% off the test, which is, nice, but it's not 80. But then you don't pay an activation fee. When you pass the test at Take Profit, they just activate it, you're good. You've already paid what you needed to. There's no activation fee as long as you use that. So yeah, waiting around for Take Profit to have some crazy deal. I don't know if it's coming. Yeah, so here's how I like to put it, guys, with pricing out props, okay? A lot of people look at Take Profit Trader and they're like, oh, but it's only 30% off and whatever, no activation fee, big deal. But it's only 30% off. Apex is 80 right now. Sure, but here's how it looks when you pass and then activate. Let's say you pay 33 bucks for a 50K Apex eval. Using the code, it makes it 33 bucks. 33, I think it's 33.40. You pay that, If you fail, you only paid the $33.40. But if you pass, now you have to pay either an $85 a month activation or a $130 lifetime activation. That's with Apex. Yeah, Take Profit Trader, you get 30% off, but you pay that up front, which for the lower level accounts, like the 50Ks, those kind of accounts, as long as you pass the eval at Take Profit, the test, and you pay no activation fee, it actually ends up being cheaper than an all-in Apex account, which is interesting. Now, the bigger accounts like the 250Ks, the 300Ks, the 150Ks, yeah, I believe the 150Ks as well, those are cheaper all-in at Apex than the 150K at Take Profit. But it's different because at Take Profit, you get daily payouts. If you pass it, you can take the money out right away. You don't have to wait 8 days. There's not as many hoops to jump through. There's less rules at Take Profit Trader. So it's like, it's a give and take. Like they're both really good. I really like both. I can't pick. But a lot of people like to think of Take Profit as more expensive. It's not. That's not true. Kings says, Nico, let's just say for some reason I don't pass the eval the first month. When they charge me again for the next month, is it still 30% off with zero activation again? Yeah, you'll never, as long as you use that code. I don't mean to plug it so much, but like, use the code. Yeah, there's no activation. You could take 6 months. You're not going to pay an activation fee. Oh man, this range, baby. It's tightening down. I mean, this is very obvious, but the bounces we're getting are about 13, 14 points at best, which is tight. There we go. There's a little attempt at a push. Come on now. I gotta tell you, a little continuation setup right here with maybe a close at like 440 on the next bar. Bears are trying to ruin it for us here. That would interest me a lot because then you have some stops to hunt at the high of day. And in this market, I have to be more selective with continuation because we're in a really, really brutal range market. This is a more brutal failed breakout range market than I've seen. I don't know, I don't want to be dramatic, but it's been at least like months and months. And you've seen that. If you look around for 2 minutes, you'll see there's a lot of people who strictly trade like 15-minute breakouts or breakouts in general, and I think a lot of them are struggling because only trading breakouts, when you end up in a market like this, it gets tough if you don't really do much range trading at all. Vinny says, it seems that even channel scalping would be unreliable today so far, Nico. Yeah, I mean, I'm taking it bar by bar. Things can always change really quickly. But like, if we just look at the last 20 minutes, you could scalp this little channel but I'm not a fan of scalping single bar channels. Now, what do I mean by a single bar channel? This is one of those things that I think I could do better at explaining what I mean by this. It's a little hard. Maybe, I think you guys follow what I'm saying here. But like when you get these tight little volatility channels and you get 1 bar push, test the higher end of the channel, then you get 1 or 2 bar pullback, 1 bar push, 1 or 2 bar pullback, 1 bar push, and it's always like a single bar move to test the outskirt of the channel. Well, it's clearly not a very wide channel. And a lot of times, reward to risk for me, it's not really there. Just because when you get those single bar channels, in my experience, you're tempting pushes through any kind of ascending support a lot more than you are on cleaner multi-bar developed channels. If that makes sense. I hope it does. Well, the range on the entire New York session so far here today is still just 96. That's how many points we've moved from the bottom of the day to the top of the day. 96. That's tight, man. That's not a lot for the Nasdaq. But that's just the New York session, okay? I'm not including Globex. But I mean, listen, we got to take it bar by bar. In no way am I sitting here thinking, well, I'm not going to take any trades today. That's never my plan. If that ends up being the case, then that's the case. But that doesn't really happen all that often. So I'm just taking it bar by bar. If we get a setup, I'm putting it on, man. Tempted little push downside. Let's see if the bears can make something of this. A lot of what we're getting today, again, is you test the outside of any reasonable channel that people are seeing, and you're getting a little bit of a reversion. Vinny says, Nico, do you prefer limit or market orders for entries? Very good question, Vinny. That's a very smart question to ask. I use both. Now, for mostly, I'll use limits. Okay, limit order. There's the terminology. Think of it this way: limit order scalping is usually reserved for, like, if I were to say, okay, let's do some limit order scalping, like it's a verb. What I really mean is like buy low, sell high mentality. Sell high, buy back lower mentality. That's channel scalping, right? Because you're taking reversion rather than continuation. So using limit orders makes a lot of sense. Now, lately on continuation setups, I've been also using limit orders. You may have noticed. Every once in a while, I say limit order out, no fill. And that's because we're not in an aggressive trend market. Now, we haven't seen a really tough, not tough, but aggressive trend market on the entire time I've been streaming. So I'm excited to kind of jump into that. In trend markets, if you're buying rollovers, like continuation, if you're using limit orders too much, you'll get left behind because these things move. So a lot of times what I'll do is, you guys remember in some of the videos a few months ago, I was using stop limit orders for entries a lot. I didn't just stop doing that. It just hasn't been the market environment to really do much of that in. I love using stop limit orders for entries. But, Vinny, there also is a time and place for entering using a market order. But more often than not, I'll be using limit orders or stop limit orders for entries. So you guys see this here. You get a little attempt at a push lower, then you get the bulls taking it higher rather than breaking it out lower. Again, very representative of a trend, I'm sorry, of a range market. Of a tight range market too. Michael says, these last 2 weeks have been tough. I blew my funded, not passing evals. Keep at it, brother. Keep at it. No market condition. Listen, guys, if you're struggling in this market condition, I know, again, a lot of people are. It's been kind of a weird condition the last, like, week and a half. I mean, I'll admit, it's been a tougher week and a half than it was the previous 8 weeks. So I wouldn't feel bad about it if you're struggling, but you gotta stick with it. I mean, no market environment has ever stuck, ever. It's all temporary. So if you were performing well in another market environment and you're not performing well in this market environment, I think it's important. I mean, we all gotta do it. Take a step back, look at what's going on and say, all right, well, what's the difference? Well, I've been trading breakouts. Breakouts were working better, 6 weeks ago or whatever, and now they're not working well. But I keep taking breakout trades the same way I was back then, but the market inertia's changed. Maybe I got to think about that. Like, have these conversations with yourself. It's important. The market, a lot of people come into trading and they assume the market's kind of always the same, and they can just make a living. Like the headline, make a living, trading this breakout setup every day. One trade a morning and you're good to go. I mean, Jesus, like, come on, like, you got to have your finger on the pulse at least a bit. The market shifts, and the traders who are the best, which all of us are always trying to get better, it never stops, can adjust quickly to those things and make, you guys have seen, I've already been making slightly different decisions here today. It's been kind of a weird, slow day, but there are like some continuation setups that in a trend market I would be taking. In a more forgiving breakout market, I would have taken today. And they probably would have worked. But I know that today when we're looking at like this, like for example, you see this here. That's a beauty of a setup in a different market environment. Yeah, it's only 2, but it's a clean close, and oh my goodness, look at, we can stop hunt. Beautiful, right? We're in a range market. We're in a very unforgiving market for breakouts, right? We're in an unforgiving range market, and we immediately reverse. If we were in a wider market, like the ranges on the days were bigger, we were seeing more breakouts succeed, not a doubt in my mind that this thing goes lower and it at least takes out some of these stops. Whether it continues from there is to be seen, but we're not in that market. You got to accept early that that's a real thing. Market inertia and the way that markets move is very real. It feeds on itself. It's all a self-fulfilling prophecy. Gotta keep that in mind. Jess, what's up? Good to see you. Crypto student Nico, do you use anything like Bookmap? What do you think about Bookmap and footprint charts? You know, I haven't used it. I've seen people use it. Listen, if you get value out of something like that, great. There's a lot of ways to make money in the industry. I don't really get value. I don't think I would get value out of it because I trade price action. I just want the information that the candles and the range of said candles gives me. That's all I want. That's all I need. Because for me, it's like the realest thing. All right, ATR is dipping below 15. It's now at 14.68, so it's low. Goodness, last two bars have been below 10 on their ranges. Last bar was 9. Bar before that was 8 points on the range. I gotta tell you, I'm a little bit interested here in just sizing down and maybe doing a little range scalping. We'll see. We're kind of hanging out right around that 5-minute 20 EMA. I don't think that would hurt on live here. Obviously, I'd continue to take the setups, but I've been thinking about this. I've been streaming now for maybe close to 2 months. And I've kind of been in the groove taking the setups that you guys are used to seeing, but that's not everything. It makes sense for me to size down and take maybe A minus, B plus, maybe even some B, but I don't let that slide lightly. Meaning, like, I don't say B meaning it's a D setup. I say B meaning it's like truly a B setup for me. And what do? You bet a little bit smaller on those setups. So let's see if that ends up coming into play here. But ATR it's definitely low. We're at about 15. We do have a bit of a flat top. I would say maybe descending resistance, which puts us in a little bit of a wedge again. We saw a similar setup here kind of earlier. Not setup, but a similar chart look a little earlier. You have kind of a wedge forming, and that tightens down, and typically you end up getting a little back and forth ping pong, and then it breaks hard one way or the other. And then I read that when a wedge slash triangle pattern forms, the closer to the point, it's better to stay away. Have you had this experience? Yes, the closer you get to the point, it becomes more and more, in my experience, 50-50 on the break. I'm not against trading the little wedge, but the closer and closer you get to the point, the more and more, I would say, the less likely I am to take anything. Because there's less room and there's more risk of breakout, and the breakout is 50-50, which is tough. Yeah, I'm kind of watching that top little descending resistance. Bears are attempting to take this lower through that little wedge. We didn't draw it, but you can see where it is. So, Def, did you ever have a moment in the beginning where you thought it's not going to work out for you? Tons. Tons. But what I will say is I do think it's helpful to have the mentality about yourself, however you can develop it. However you get there. But you're probably going to have to pull it from somewhere else, something else in your life that you've done. It helps to have the mentality of like, well, if it can be done, then I can do it. As long as it's not a literal impossibility, which people will try to sell you that day trading is impossible because they failed at it. It is not. There are lots of traders who you will never hear from who make a lot of money and all they do is trade. And have done so for decades. So it's not an impossibility. So that's off the table. So you're like, okay, well, I accept that it can be done. So then you have to have the mentality of like, well, if it can be done, if somebody else can do it, then I can do it. Have that mentality and don't give up. It can be done, baby. Just trade small, track your data, find an edge, and scale it. There you go. There's the recipe. There we go. There you go. Bear is trying to take this thing lower out of that little wedge. Good, good, good. All right, ATR's at 14. I'm interested in a little retest short here at about 414-ish. Let's see how this moves. This wouldn't be full size, by the way. I gotta reserve the full size for the A setups, on only the A setups. But nothing wrong with sizing down and doing a little bit of scalping here and there. Even if it just kind of helps you develop a feel for what's going on in the market, keeps you engaged. Nice downside push here out of the Bears. We didn't really get that retest I was after, but that's okay. I'm still kind of watching this movement. I'll take a little stab at fading that. Sizing down. Not sitting big at all. Average is 417 and a quarter. Just looking to fade that with small size again. Just a little channel scalp mentality here. And I'll bring my stop in even more to make the risk even that much lower. Yeah, I'll bring that stop in, and I will go ahead and place target at 97 and a quarter. So just look to fade that a little bit. Again, size down, not a big trade, just a small little scalp. I'm interested in taking more in addition to what I currently take on stream. Just more little scalps. You know, quality of the setup, the more setups you get, fades a little bit, but that's fine. You don't want to let that quality fade too much, though. You start taking, like, C setups, or losing any kind of edge. But the way that I see it, when you have edge, or at least when you have reason to believe that you have edge, you should take the trade. But it makes sense. This is where, like, exponential bet sizing comes into play, which is a big deal. When you have reason to believe that you have a really good amount of edge, you should technically bet more money, right? Kind of like a poker game. And when you have, you know, maybe a B, B plus, maybe even an A minus setup, but more like a B, B plus setup, another one with size down a little bit. You shouldn't really bet the same on an A plus setup that you do on a C setup, right? ATR, by the way, is currently sitting right around 15. It's tight. Chris says, how would one adjust risk while trading one contract, though? Just a tighter stop? Well, if you're trading a mini, you drop down to micros. But if you're trading one micro, you're kind of stuck. You're kind of stuck. Yeah, maybe you'd run a tighter stop, but if you can't really justify running a tighter stop other than for just the sole purpose of adjusting risk down, then you're already kind of bottomed out. And you just got to make a note in your data. Yeah, Chris, if you're already on 1 micro, just make a note in your data that you would have sized down here on a particular trade. Or make a note at the top of where you're writing out your data. Say, hey, what I classify as you know, B setups and lower, or B plus and lower, I size down to this, and then you just put an asterisk, or you label each setup. You give it a grade on your sheet of paper that you're tracking your data. Well, a couple points green here on the trade so far. Just letting it sit. Yeah, just a little guy, a little scalp here. ATR now. What are we at? We're at 13 on ATR. Tight, tight, tight. Yeah, I'm sitting small size here, just letting things work. Small, 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 giving it room. I'm not big on getting chopped on these. I give these scalps a little more time in a market like this. By the way, sometimes it's not going to always be the case. Depends on what the ATR is doing. You know, all these moves, they look really big, but they're not. I mean, the range on these bars is 17 points. Context. Context is always the word of the day. Now, all right, let's look at range. So range, oh goodness, it hasn't expanded at all. Well, I guess we haven't made a new high or a new low, right? Range on the whole day is still 96 and a quarter. Well, HR is still holding up above 13, between 13 and 14. Again, if that starts dipping below, like well below 12, especially below 10, that's about it for me. But we're holding 13 right now, so. And again, usually, now remember, you know, Trump is speaking here, and we do have, Well, at least I haven't seen any headlines, but he was scheduled to speak at 10:55, so we'll see if we get headlines there. But remember, what was it? It was there was a Trump and Defense Secretary announcement at 3 o'clock Eastern today. That was announced this morning, so it's 2 p.m. Central. So it's likely that we start seeing ATR start to, even if it dips maybe below like 12 midday, it's likely we see that expand later in the afternoon here today. King says, Nico, I've never traded futures during a bear. Well, I would say, well, is this the type of boring price action I should expect with sub 17 ATR bars? Listen, bull market, bear market, I'll take either. What we don't want as traders is a sideways market with very little news. Nothing to really move things around. Volume disappears. That can sometimes happen in summer, but I think a lot of people overhype like the market dying in summer. The market's a really big place. It doesn't just die every summer automatically. Volume is oftentimes a little lower sometimes, sure. But it doesn't mean you should just take every summer off. But yeah, when we're in a range sideways market, you see this a lot. It's really common. But it never lasts. Then you end up getting a breakout on a daily chart one way or the other, and you end up moving. The quickest way to fix this kind of thing, by the way, is to see the market like crash. I'm on both sides of that fence. Not that I would want to see that happen for the sake of the United States, but from a selfish perspective, like as a trader, like that's kind of the quickest way to light a fire under the market, unfortunately. So I'd take that. Not that I want to see it happen again, but you got to sit on both sides. I'd take a big old pump. I don't care. Just move is my mentality. Day trade Tom. Don't worry, boys and girls. 2008 style trading coming real soon. Crashing markets give the best reversion trades. Starting to sound like the media, Tom. crash, man. It's coming daily. You're starting to sound like Jamie Dimon. That guy just cannot seem to be positive. Well, we're green on the trade. It's in about 9-10 points in the green after that little pullback there. I cannot believe that the range on the day today is still less than 100 points. Pretty wild. 96.25 is the range on the entire New York session. Again, I mean, for context, 6 weeks ago, about 6 weeks ago, we were seeing bars with 400-point ranges. Single 2-minute bars in 2 minutes. And it's past noon Eastern time, and man, the whole range on the day is less than 100 points. Just interesting. Scott says, is this past week abnormal, or is this wiki fickle price action the norm? No, I would not call this the norm. I would call this abnormal. Now, again, 6 weeks ago, like you look down here, this was abnormal. I would call this abnormal. I mean, it's very clear. We have like a little flat top market, just can't really make a decision here. This kind of stuff is normal. This kind of stuff is somewhat normal. Abnormal. Abnormal. And it's a lot of just indecision, a lot of tariff talk stuff. Oh, just slow. Market is slow, man. Okay, so ATR is coming in to about 12. We've now dipped below. I'm sorry, actually, I think it's holding 13. It's hiding behind. ATR it's actually in the high 13s, maybe 14. Which again, now we're even having this conversation, it's low regardless, but that starts dipping below 12, 11, especially 10. That's a signal here. But for now, it's holding 13, 14, mid to low teens. C-Max says, I think we've done enough testing of the 20 EMA on both the 5 and the 2 today. Yeah, tell me about it. We're hanging right around the, well, I'm more so looking at that 5-minute kind of 20 EMA. But even when we get a move, it's not too big of a move. Well, listen, I hate to say it, guys, but I'm kind of pushing the limits on time here. And we got to let this baby work. So, reminder. This ends in 11 hours, okay? 80% off, single day pass, use code BIG at Apex, okay? But if you're more like, well, I'm into daily payouts, then Take Profit Trader is going to be your best bet. 30% off, no activation fee. with code BIG. I'm gonna let the scalp do its thing. You guys know how I like to manage. Really no changes will be made from what you guys have seen out of me thus far. And I appreciate you guys joining me. I will be back tomorrow morning, 8:15 a.m. Central Time. Subscribe to the channel if you have not done so yet. If you didn't like the stream, press like on your way out, and it'll make your life easier in the morning to find it. All right, guys. Well, hang in there. Volatility's tight. Hang in there, man. If you're frustrated, walk away. If you're just kind of chilling, hanging out, hopefully volatility picks up for us here this afternoon once midday passes. All right, guys, have a good one. Again, hang in there. I'll see you guys tomorrow morning. All right.